Coronavirus has caused global panic, and the market is currently a reflection of this. The initial consensus was naive to assume coronavirus was a domestic Chinese problem. Now that the epidemic has spread, the economies of more than 100 countries have been negatively affected. Nervous investors have urgently begun selling assets. This has created a destructive cycle of panic selling, adding fuel to the fire. But when a domino effect is initiated, we can identify which pieces will fall next. So how can traders make profitable deals during a pandemic in light of this? Each sector of the market suffers its losses, which go on to influence the rest. Take the airline industry as an example. Airlines canceled or reduced flights, and the industry may come out of this with a $114 billion loss. When planes do not fly, they do not use fuel. Oil companies do not receive revenues from major customers, and urgent measures taken by the oil sector often have adverse consequences for the oil prices. In times like these, traders get rid of risky assets and channel money into protective assets such as gold. No one can predict how deeply the coronavirus will upset the markets. Significant losses are predictable, but how will everything change going forward, and what will the resulting balance of power look like? Calculating projections for the long-term market is now close to impossible. There is hope, however. We can continue to closely monitor the current situation and make well-informed guesses as to what will be next affected by this domino effect. Now is the time to stay calm and watch the market. To understand which deals would be less risky for you, sign up and join us for our next release. In our upcoming video, we will discuss in detail about each sector of the market and how we can earn amidst a pandemic.